MIS review. So the question is going to be how you do the MIS review. That we have to give the answer for here is that when we prepare the MIS, we have to prepare schedules for P&L and balance sheet reconciliations. We have to prepare the schedules for P&L and prepare the reconciliations for the balance sheet or balance sheet reconciliations. We ensured when we are doing the closures, when we were closing our month end, that all entries has been posted in the system. We followed the checklist as well. We ensured as per that checklist we have done everything, but there might be a scope. There might be uh, you can say we have to reinsure since we have to present that report to the management or our managers, and he is going to present to the management. So we have to ensure that we are submitting with more accuracy and on time that report to the management. So reinsuring the accuracy, we have to recheck once with schedules and reconciliations. When we prepare the schedules for each and every expense head from the P&L for our sales, for our COS, cost of services, or COGS, cost of goods sold, for direct expenses, for indirect expenses, everything, whatever is there in the P&L, we have to prepare the schedule for that. We have to schedule, it means that we have to extract the GL details from the system and we have to see what's there in that for that particular period. Anything is new expense is booked, either that expense is correct or not, or that some incorrect booking is there in the system. When we are doing the month-end activities, we are just ensuring that whatever the entries we have to post in the books of account, we are doing that. The month-end activities and MIS review, that's a two different thing. We can't mix up this. At the time of doing the month-end activity itself, we are ensuring that everything is correct. There are certain activities we have to do when we are ensuring the month-end activities. We have to ensure all the recording has been done in the systems, recurring journal entries, new journal entries, whatever accruals, prepaid, everything we have to ensure when we are doing the month-end activities. And once we completed this month-end activities, once we done these month-end activities, then we have to prepare our draft MIS and to check either whatever we have done in the systems that's correct or not. Then we have to prepare the schedules for that. We have to prepare the balance sheet reconciliations for that. And when we are preparing the schedules, balance sheet reconciliations, we need to reinsure that everything is correct or not. And if something is not correct, as per our own review, we have to do the rectifications for that. From the balance sheet reconciliations, from the balance sheet review, or this is going to be the MIS review. If you see from the balance sheet reconciliations, we have prepared the balance sheet reconciliations for each and every ledger what's reflecting in balance sheet. Either it's going to be your FA, fixed assets, Either it's going to be your AR account receivables or your bank investment, then loans and advances, then your CWIP, CWIP from the fixed assets, then your all the receivables, any advances, any fixed deposits, plus any prepaid expenses that's going to be. So whatever is there, your unbilled revenue. So whatever is there in your balance sheet, each and every grouping head, each and every ledgers, what you are presenting in that balance sheet, you have to prepare the reconciliations for that. You have to review with the respective schedules for that. And you have to reinsure that everything is correct. And if it's not, you have to take the entry in the books of account. Before going to submit that MIS to your managers for review, you have to reinsure. And if everything is correct, then that's okay. Or if any further entries is need to do in the systems, you have to do it. And then you have to re-prepared your MIS. You have to refresh your trial balance. Your MIS is going to automatically prepared if it's Excel formula driven, and you have to submit to the your respective managers. Now, if you see from this is prepared from the balance sheet, now the computer is 10 lakh. Then you have to see from the your FAR, fixed asset register, either this 10 lakh is correct or not, or any additional expenses is pending to book towards that asset. Here in the P&L, the depreciation is not charged, and there we have the computers, or either this is capitalized or still this we have to present in CWIP. That's a capital work in progress. We have to see from that. We have to see from the fixed asset registers. We need to check either put to use certificate is there in the place or not. Have we done the capitalization of this or not? And if it's not, we have to transfer towards the CWIP, and we need to get the confirmation for the capitalizations. And from that date, we have to charge the depreciations as well. Or any additional asset is there in the FAR, fixed asset registers, but that's not here in our fixed assets. Might be some recurring asset is there, and which we done the 100% depreciations or last month of depreciations of the last, that's June, but we haven't done the entry in the systems for depreciations, and that asset is still added in our fixed assets. Kotak Bank, we are saying the balance is 24,56,100. We have to see the bank screenshot for the balance confirmations. How we are going to ensure that this 24,56,100 is correct? So we have to see from the screenshot of that closing balance from the bank statement. There is no need to ask the entire month statement. At least we can see from the check from the closing balance. If the balance is something different, then where is the balance sheet? Where is the bank reconciliations? Or if the balance is match, then we are okay with that. And if the reconciliation is there, then we need to again see from the reconciliations. What's there in the reconciliations? Either there are certain bank charges we haven't booked in the systems, then we need to take the entry for that. That's our expenses, and we have to take that impact in the P&L. So we need to see for that as well. So we have to check from that bank reconciliations. Account receivables, we are mentioning the 27,000 rupees is there. Either any provision for doubtful debts is going to be required here. What's our aging report is there. If we have the aged balances, then we need to take the entry for that in the systems. That's also we have to check. And if we need to take any entry in the systems for that, then we have to discuss with the respective team for having that entry in the system for provision for doubtful debts. Coming back to liability sides, we have mentioned the accounts payable. Then we need to again see with the accounts payable aging list. Either that's all is payable or something is already paid, but we haven't recorded here. That's also we have to check. And that's going to be the part of the bank reconciliations. We have done the payment or payment is released from the bank, but we haven't recorded that in the systems. Then accounts payable is here and the balance is that less for here. And that's going to be that's a part of our reconciliations. Output GST, this we have to check with our GST reconciliations and to ensure that this is correct. Salary payable, this we have to check with the payroll. As per the payroll, how much is actual salary payable? Either this 9 lakh, less of that, or it's more than that. Then we have to recheck with that payroll schedules and to reinsure that this is correct. And if it's not, we have to take the entry for that. We need to take the entry for rectifications. TDS payable, reimbursement of expenses, equity share capitals, profit and loss is coming from the P&L. So for each and every line items, each and every ledgers what we have mentioned here, we need to reinsure this that this is correct. We have to prepare the reconciliations for that. This is balance sheet reconciliations. Reconciliation means salary payable. This reconciliations we have to do with the payroll. What's there as per the payroll as a salary payable? If it's going to be have here the part of your accrued expenses, then that's going to be do the reconciliation through the accrued expense schedule. Either that's matching with that or not. And then again, we have to do the review of that as well. If you are going to say that so accrued expenses is there, and against that accrued expenses, we need to further do the analysis of that. How many aged accrued expenses is there in the books of account? And if it's going to be the more than 1 month, 2 month, 3 month, if it's more than 3 month, then why? So since last 3 month, we have accrued expenses in the books of account and we are carry forwarding that expenses every month. We are taking the reaccruing that entry. Then why that particular expense invoice is not received and why we haven't booked that invoice in the system? Since we already availed the service, we created the accrued expenses, but it's more than 2 months, 3 months, still that invoice is not booked in the systems and we are reaccruing that accruals. And that's not the correct. We have to get the clarifications on that. We need to check with the respective managers and to discuss on that. Boss, we already accrued this, considering that the expense is incurred, and you confirm that. And since last 3 months, we haven't received invoice from that particular service provider, or that invoice is not booked in the systems. Then what's the issue for that? Might be that invoice is already received, but that invoice is still with that service receiver itself. The person who availed the service, that invoice is still with him, or might be he misplaced that invoice and not submitted to the respective team for do the accounting entry in the system. Then once we done the follow-up, he is going to again re-ask that service provider to provide the invoice. But if we haven't done the follow-up, then that accruals is going to be remain the same and every month we are doing the reaccrue of that. So we have to reinsure what we are doing the presentation to the management, what the numbers we are mentioning here. We have the justification, clarifications, backup, schedules for everything. And once that's correct, then we have to present, we have to submit this to our manager for his review. So whatever we are presenting to the management or our manager, we have to, or to anyone, when we are presenting anything towards anyone about our work, we have to at least 80% reinsure that what we have done, that's the correct. And if someone is going to ask the questions on that, we have the clarifications, justifications, and backup details for that. If the salary payables we are mentioning here, the 9 lakh, and if I want to do the salary payout now, I need the employee wise list of that. How much is need to pay to whom? But if I don't have that list, if I don't have that amount allocated to employee, and I don't have the employee wise list of that, and if that's there but not matching with the outstanding as per the payroll, then how I'm going to do the payment of that? If the TDS payables we are mentioning 1,06,500, and if I ask the Chalan what's we paid for previous month in this month, and that amount is something different, then that's also is not correct. So whatever we have mentioned there as a TDS payable, and if the 7th is a due date and today is the 8th, and I'm preparing the MIS for October, and if I ask, give me the paid challans for this TDS paid amount, and if the TDS paid amount is something different, and payable as on 31st October is something different, then how I'm going to rely on this number? It's not going to say that key the difference is not going to be there. Yes, when you're preparing the TDS payable entry in the Excel, and if you are not extracting exact TDS payable from the system, or you extracted from the systems, but still might be on certain invoice you haven't deducted the TDS when the booking has been done from the accounts payable team. They missed to deduct the TDS. And in review, when we are looking towards the P&L expenses, we observe there are certain expenses, or the person who is paying the TDS, he also done the some sanity check in the systems, and he observe there are certain expenses on which TDS is not got deducted in the systems. And now accounts payable, that's SL, has already been closed, and he haven't informed to R2R team for take the entry in the systems, and one side that's accounts payable is there. Instead of having the liability here on a TDS payable, that liability is parked here in accounts payable. Some 50,000 is need to be deducted from here accounts payable and park it here in the TDS payable and pay to the government. It's part of the liability, but it's in accounts payable. And when he doing the calculations of TDS payables, and he observed and he added that 50,000 of TDS amount manually in Excel working, and done the payment to the government. So the challenge is going to be more than this amount, not the exactly of this amount. And when it's going to do the comparisons, then we observe that the TDS payable is 1,06,500, but he paid it's more than 50,000 rupees of this amount. And when we ask, we got the clarification stating that on the certain invoices we haven't deducted the TDS, and when we were preparing the working for TDS payable, we observe and we paid that. Then why you haven't informed to R2R team as well? And if he might be informed in that scenario what the entry is going to be. So before going to submit our report, once we observe that's the issues, then we have to do the entry in the GL. We have to take the rectifications for that. And what the rectifications we are going to do is that this accounts payable. So we are going to do the debit to accounts payable, since we have to reduce the balance of the accounts payable to that extent. If it's going to be the 50,000, to we have to credit to TDS payable account. That's going to be our liability. So We have reduced here our accounts payable by this amount. So your accounts payable is going to reduce. This amount is 50,000 and your TDS payables is going to be increased to that amount. So your balance sheet is remain going to be the same. There is no any difference in asset and liability, but from accounts payable and TDS payables, that particular liability is reduced from accounts payable and parked towards the TDS payable. This we have to pass the entry in GL. And similarly, immediately in the next month, we have to do the reversal of this. So it's going to be the same TDS payable account debit to your accounts payable account credit. This entry is there in the system. So if you have auto reversal, then this entry is going to be there in the systems for TDS payable account debit to accounts payable account credit. And in the next month, these guys are going to do the entry for that to deduct the TDS on that particular vendors and going to park towards the TDS payable. So this analysis we have to do when we prepare the MIS. And when we do this MIS review, once we prepared as per the schedules and all these things, and if any uh, analysis based on that review, if any entries is need to do, then we have to redo that entries in the systems. And once that's done, then we have to resubmit that MIS to our manager for further review. Plus, we have to follow the checklist for ourselves based on this. Whenever we are doing any review, whenever doing any activities, we need to ensure that what we observe in that, when we are doing any work, when we are doing any activities, and someone is going to do the review of that. And once we submitted and he reviewed and he highlighted certain issues on that, highlighted some points in his review. So we have to make a checklist of that. What's going to be the key parameters when we are preparing MIS? So the basic your balance sheet reconciliation should be there. Your all P&L analysis you have to do it. You prepare the checklist as per your own, but after that as well, if any point is highlighted by the management, highlighted by the managers saying that this is something is incorrect, and he asked to recheck and he observes some issues over there, immediately we have to put it in our checklist. Okay, this is also is going to be one of the checkpoint. If you do in a that way, your checklist is going to be initially you prepared for the 10, and when your managers is review that, he also highlighted some point. When your management team review that, they also highlighted something additional point. If you club that, initially you prepare the 10 checkpoint, then your manager highlighted certain things, you added the 5 checkpoint, your management team done the review, they also added some point, that's a 5 their checkpoint. If you club this, that your checklist is going to be 10 plus 5 plus 5 for 20. And next times when you are doing the MIS review, if you ensure this 20 point in your checklist, okay, this is done, this is done, this is done, this is done, then there are going to be the very rare scope for management to ask the questions or raise any query on your prepared MIS. And that this guys also is going to be get the confidence on that, boss. Yeah, he improved a lot in a 3 month. Whatever we highlighted, that error is not there in the futures. And how we are going to ensure that? Once we noted down, once we reviewed, when we prepared the MIS, then only that's not going to be there in futures. And when we do for 1 month, 2 month, 3 month, automatically that's going to be our habit. Yes, I have to ensure that. And if you do this marathon for 3 months, I'm sure 80% or more than 90% your work is going to be the in presentable way. Very less scope is going to be there for how the any query from uh, your management or managers. If that's there, again, you have to add it into your checkpoints. So next times you are going to ensure for that as well. So that's the way we have to do the MIS review, balance sheet review, P&L review, and re-ensure everything is correct. Okay.